Welcome to another episode. Today, I'm joined by Noah, who recently joined zkSync as the Director of Interop Product. Noah, welcome and thank you for joining us.
Thanks for having me. Excited to be on here today and chatting with you.
Awesome. Why don't we just start there? I've known you for quite a long time in Interop, like a couple of years, and recently you joined zkSync. So, what made you excited to work at zkSync, and why is that the right place for you right now? And you've obviously joined as the head of Interop, like director of Interop. So, what does that mean for zkSync right now?
Yeah, so the reason I joined zkSync is I actually had a conversation with Alex a few years back at ETH Denver. It was the first time I had met Alex, and I met him when I met Brendan Farmer as well, back when I was running NodeKit. And at that time, I had essentially made the bet that shared sequencers and super builders were needed, and that fast ZK interop was this pipe dream that wasn't going to get out there. And Alex essentially told me, watch me. We're going to have 1 second ZK interop within a couple of years. This whole shared sequencer super builder stuff, it's a fad. It's not necessarily going to be needed. And we're going to have trustless ZK interop at scale. And I, being young, a startup founder, mildly arrogant, of course, said, there's no way we're going to win. Basically, prepare to use super builders. And essentially what happened is I ran NodeKit for a couple of years. And at the end of the day, NodeKit ended up not essentially panning out. We ended up shutting that company down earlier this year. And shortly afterwards, Alex approached me essentially and said, well, we have 1 second ZK interop. And that's kind of what persuaded me to come back. So I think I've kind of learned the lesson the hard way of 1 second ZK interop is here. ZK proofs are only going to get faster and faster. We are going to see ZK chains that will run on your cell phone. And it's honestly insane because we've seen that overall, like this tech's only going to get better and better. And I think that's where I think we see this like internet of value actually come on chain. And like, if you want to bring the entire world on chain, they need to be able to operate their own chains, have their sovereignty. And like, we're not all going to live on Solana. I like Solana just as much as the next guy. But at the end of the day, expecting everybody to live on one chain is like expecting everybody to live in New York City. I live in New York City. Doesn't mean I expect the world to live in New York City.
Makes sense. It's lovely to hear how your vision sort of aligned. And you mentioned trustless interop there, right? So I was going through a bunch of zkSync pages, Alex's page as well, and you guys have come up with a new term for trustless now, which is incorruptible finance. So what's the story behind that?
Yeah. So for that, essentially, the term for us is like this incorruptible financial infrastructure, because over the past few years, zkSync has kind of taken a different route than a lot of the other L2s, whereas we've been very focused on institutional adoption, kind of getting this product ready for enterprises, because we believe that's, at the end of the day, our goal for the company is to advance freedom for the world. And the way that we believe we do that is via ZK proofs and providing like incorruptible infrastructure, because ZK proofs provide an actual proof of computation that it can prove computational integrity rather than just saying like, trust me, bro. Like a lot of these institutional chains right now, whether they're running on like Hyperledger Besu or a number of other chains that I'm not going to mention, essentially it has trust me, bro security. And we believe that like the fact is that there's a better way of doing things that is safer, verifiable, and faster. And that is what ZK proofs kind of represent. And we believe the world needs incorruptibility in their financial systems, because at the end of the day, we shouldn't have to trust institutions on every single thing. And institutions also should be able to minimize counterparty risk and understand, hey, this asset that I'm getting is the real asset. And understand that like, hey, when somebody pledges collateral on something, they actually pledge the collateral to only you and not 5 other people, as we've seen in countless blowups over the past few years, where a lot of what happens in financial systems and why they blow up is because corruption happens and the information is essentially asymmetric, and that's when people get hurt and that's when people lose money. And if you can build systems that allow for privacy, it will still be in compliant and like still being incorruptible. That's where we think there's like a massive opportunity to like actually build systems that finance that works for you, not against you. That's the way I kind of like to describe it internally.
Yeah, I think I read a tweet that says that's something called "Don't be evil," and then ZK kind of enforces "Can't be evil" because you can't
Exactly.
corrupt the finance.
Exactly. And I think that at the end of the day, it's obvious that enterprises are going to be coming on chain, and we can either like kind of bend the knee to them and say that we're going to sacrifice certain things that make crypto what it is, or we can build out solutions that allow enterprises to benefit from all of the great things that make crypto crypto and benefit from Ethereum's cryptoeconomic security and benefit from these cryptography advances and kind of build out a stack that's enterprise ready. So banks, asset managers, like big financial institutions can actually come on chain and still settle to Ethereum, still remain connected. And that's kind of what our main focus is at zkSync with our Prividiums and like zkSync Connect, which is our Interop product. So I think at the end of the day, it's like that's how you actually make a huge difference and bring the whole world on chain rather than just focusing on like the crypto native side of the market. We believe in kind of growing the pie
Mhm.
long term.
Yeah, and you mentioned like you have the tech stack to kind of make this possible, right? And the ZK Sync that a lot of people know was ZK Sync era, basically like a one chain ecosystem. But you've obviously like moved away from that, and now you're building sort of like a chain of chain sort of ecosystem, and then you have all the tooling for institutions to build their own chain, and we'll talk about like how you're enabling privacy for those chains. But maybe give me a better sense of like what does the zkSync tech stack look like today? Because I think a lot of users specifically still know zkSync era as like a single chain, but that's obviously not the case today.
Yeah, so zkSync Era was one of the first chains built on the zkSync stack. So zkSync stack, up until recently, up until the Atlas upgrade, was using the Era VM, which was not fully EVM compatible and not fully EVM equivalent. And essentially, due to that, there were a number of issues with that essentially stack. And with the zkSync Atlas upgrade, we became EVM equivalent. We now have around 10K TPS and 200 millisecond block times. And we're also having 1 second interop that will be going live over the next few months. So due to that, we've essentially, it's been like a step change
Mhm.
overall in like the performance, and also it's much more affordable and easier to run these chains as well due to just much faster ZK technology. So ZK stack is the chain stack itself. Prividiums is essentially the private enterprise L2 solution built with role-based access control that we like to call the bank stack of Ethereum. And that's essentially built on top of the ZK stack. It's like the role-based access control, all that features. And then below that is something we call the ZK Gateway, which is our shared settlement solution. It's essentially our shared bridge that allows us to have connectivity between all these different chains as well as aggregate their proofs. And ZK Gateway is the thing that kind of backs the zkSync Connect. The reason why we have two different names for it is because zkSync Connect is kind of this overarching thing of both L2 interop and L1 interop as well. So we wanted to make
Mhm.
sure it wasn't confusing to customers if they thought that. So a lot of terms, but hope you got
Yeah.
all of that.
I mean, I have a decent sense of it, but of course, like anybody who actually wants to understand it, like go read the docs. Like all the information is there, of course.
Yep.
But I want to talk to you about the specific design choice, right? Like roll-up clusters are very common today. Like I think every ecosystem is going down this direction instead of building like a single chain model, right? So why do you think that's the case? Because it just feels like consensus at this point where every ecosystem is just going down the same direction.
I think they are, but I think some of them are doing it in different ways. Like I think
Mhm.
for us, we recently put out a piece like the Ethereum is the main capital hub of zkSync, where we're truly bought into like this idea of building out a network of chains that's truly our value is in the network itself rather than in having one central chain. Because we've kind of seen this playbook over the past few years of new chain launches, like insert like chain XYZ, like new L1 launches, new L2 launches, they pay out a ton in incentives. And then 90 days go by, the pre-deposit vaults open up, people move their capital to the next essentially hot opportunity, and the chain dies. And I think for us, we've been trying to avoid doing stuff like that and playing those same games with our new stack. And in general, we believe there's the better way of kind of doing it and building a chain of chains is kind of going vertical, where we have our own zkVM, we have our own rollup stack, we have our own interoperability solution, and we have our own private layer 2 solution as well. And because we are fully vertically integrated and we own essentially the whole stack from end to end, we can offer a much better experience than other kind of stacks can provide
Mhm.
on that kind of need to outsource their interoperability, need to outsource their privacy, we even have our own rollup as a service as well. So we run a lot of chains for our ecosystem as well at Matter Labs. So due to that, in general, I think we're just able to provide a much better experience. I've seen this firsthand from my experience at NodeKit. At NodeKit, we were trying to support multiple of these different stacks, connect into all these different interoperability solutions. And at the end of the day, what I realized was you can't build a great solution if you don't kind of put a line in the sand and
Correct.
take some hard opinions. Because if you try to be everything for everybody, you, nobody ends up getting supported that great. You end up having like upgrades across different stacks, and it's just tricky. And you can't actually offer a true like composable experience across chains. You always have a few hiccups, and because we're vertically integrated, we're able to avoid a lot of those issues at zkSync.
I mean, so what would you say are some of the opinions that zkSync has kind of taken to get this approach right? Right. I mean, you of course like you have a vertically integrated stack, and I also want to touch on how like Ethereum is the main capital hub. I think those are the two main things, if I'm not wrong.
Yeah. So on the vertically integrated stack part, we we chose kind of the hard way of building out a ZK rollup when a lot of people said ZK EVM rollups were impossible to do. So
Yeah.
because we've been building out ZK rollups for so long, we've now been able to build out a ZK rollup that is the most performant ZK rollup with the recent Atlas upgrade. And what I mean by the vertical integration is because we own all of our own essentially proving infrastructure
Right.
and have our own cryptography team in a house, we're able to have a very quick, essentially like um, we're able to have a quick feedback loop between all the different teams internally. So when new performance improvements happen on the cryptography side, we're able to directly integrate that into our rollup stack solution and our interoperability solution as well. So it allows us to always be at kind of the forefront of innovation and just build out like a killer solution that works best for our products.
Got it.
And that, yeah.
Makes sense, of course. Like, if it's always better to like have control over these things because then you can ensure that there's a reliable experience, right? Like, if any of the ecosystem teams actually, it's good to rely on other people from like a decentralization perspective, perhaps, but then from like a product quality perspective, it's always better to have an in-house team.
Yeah, like we do have other people that do run these chains, and we are a big fan of self-hosting and stuff like this as well. And we do
Right.
believe in decentralization of the network. But I think in general, decentralization of the network and decentralization of the tech stack are two very different things, at least in the early days of these ecosystems. And for us, it makes sense to kind of take a very opinionated approach on this. I think as you get to be somebody like an Ethereum or a Solana, where you've been live for so long and at such a large scale, then it makes sense to have a bunch of different clients and kind of have more diversity on it. But I think when you are kind of smaller and still going after these big customers and want to be constantly kind of winning these deals and kind of scaling up to support these new use cases, it makes sense to have a very focused product approach. Otherwise, you end up just kind of going in a bunch of different directions.
And the other thing that you talked about was like how Ethereum is now the main capital hub of zkSync. I think that's the main thing that I think went viral because like that post had 1 million views, if I'm correct. And I think the main takeaway for me from that was, let's say the early chain launches that we saw with Base or with Arbitrum, like they basically had to bootstrap liquidity on that chain, and then any of the applications that were sort of like building a specialized rollup connected to Arbitrum One, for example, like Hyperliquid, they would use Arbitrum One as the liquidity hub. But with the upgrades to Atlas and like what you're bringing forward now, you're saying that the liquidity hub can just be Ethereum. Like we don't need to sort of fragment liquidity and like rebuild it again on another chain. We can just tap into Ethereum. So I think that changes the L1 to L2 dynamic, right? Because
Entirely.
earlier, like people used to talk about how the L2s are parasitic to the L1. But I think with this new dynamic that you're pushing forward now, I don't think that's a question anymore.
Yeah, I think a lot of the L2s right now, and I think this is probably one of my more controversial takes, is I think a lot of the L2s right now are parasitic to the L1. And I think that we've kind of taken a different path of what does it mean to be synergistic and be like symbiotic with the L1 in general. And essentially the way that we're able to do this fast, L1 interop, which is kind of this main focus of this Ethereum as our capital hub, is because we have very fast and cheap CK settlement time. We can essentially settle to Ethereum more frequently than any other L2. And due to that, we essentially have been able to build out basically this like messaging framework on top of our settlement. So we're able to essentially control an account on ETH1. And with that, you can tap into like Aave or on-ramps or any number of applications on ETH1. And due to that, you're able to actually tap into that liquidity, which is crucial for the enterprises that are choosing our stack. We're working with everybody from major banks to nation states to enterprises globally that want to tap into Ethereum's liquidity because Ethereum has the most cryptoeconomic security. It has the biggest DeFi ecosystem. If you want to, you can just look at Aave alone. It has 40 plus billion in deposits. That's so that is such a monumental amount of capital that at the end of the day, if I'm a bank or I'm a financial institution, why wouldn't I want to tap into that liquidity using my tokenized assets rather than just bootstrapping it on my own chain? And it doesn't make sense for all these different institutions to launch their own private instances of these applications, which is what they used to do in the past. Now that there's regulatory clarity around it, we've just recently gotten the Genius Act in the US. It looks like we're going to get some market structure recommendations soon as well. Due to that, due to that kind of coming into law, it makes it a lot more interesting for these institutions to actually operate on chain if they're tokenized assets. We've seen everything from tokenized private credit with tradable to bonds to private equity to all of these different assets that are coming on chain. To think that those assets don't want to tap into L1 liquidity, we believe is kind of silly. And it just makes way more sense to kind of do a much more targeted approach and say, we're going to plug these assets into the Aaves, the Pendles, the Morphos of the world, rather than saying we're just going to run an incentive campaign like every other L2. We'd rather do what's best for our customers, not what's best for the optics of TVL. Like TVL is a flawed metric at the end of the day.
I mean, so can you like give me an example of, let's say, an institution actually launches a chain with zkSync, and then, like you said, they can tap into the L1 liquidity and they can work with apps like Aave and Morpho on the L1 and make their assets tradable, right? Like you said. So, what does that actually mean in practice? Like, are these are you imagining these institutions first tokenizing their assets and then creating markets on Aave to make
Yep.
them tradable?
Yeah, I think that's one use case for it. I would say that that's more on the enterprise institutional side. We've also seen as more on the crypto native side as well. We have an exchange called Gravity within our ecosystem that's a perpetuals exchange. And for them, they could allow a user on L1 to lock collateral in a smart contract and essentially use that collateral as margin on their exchange. So that means that for them, they're able to have much better capital efficiency for users because they're constantly earning yield every second while they're making trades on the L2. And Gravity, because they're able to have fast L1 settlement, they can still liquidate that user in a matter of seconds. So, well, not matter of seconds. They can still liquidate that user in a matter of minutes. Um, and I just think it's a much better situation for everybody involved because users don't want to have compromises. And with this solution, they can still earn yield. They can still tap into that liquidity while allowing institutions to have the sovereignty that they require. Just from a regulatory clarity side of things, institutions want to operate compliantly, privately in a verifiable system. And we believe zkSync Prividiums allow them to do that. And allowing them to tap into L1 liquidity means these chains aren't siloed anymore. Like a lot of these private chains, private institutional consortium chains have had to be in the past. We believe you don't need to make that compromise anymore. So we'd rather help them actually bring network effects to Ethereum rather than just doing it on their own private hub.
I mean, so why would that be different if I were to, let's say, go and launch like an Arbitrum chain or like a Polygon Aglayer chain, right? Like, how would it be different on the ZK Sync stack compared to these different stacks?
Yeah, so the difference is, as far as I know at this time, we're the only one that actually have the L1 interop functionality. So we're able to allow users on the L2 to control an account on L1 and essentially trustlessly send messages between the L2 account and the L1 account. And so due to that, it's a very unique functionality that other L2s do not have at this time. So the L1 execution happens from essentially what we call an aliased account on L1, but the L2 remains the primary UX surface. The user only needs to connect to the L2, and it's a very simple experience. And this also is interesting for things such like on-ramping. So instead of needing every single exchange to support your new chain, you don't need to do that anymore. You just essentially can control an account on L1 and have a user be able to withdraw from like a Binance, for example, send funds to that account and have those funds
Okay.
instantly appear on your L2 wallet. So it makes it a lot cheaper to launch these chains in general, which we think opens up a lot of doors for people that might not have wanted to launch a chain in the past, because it's really expensive if you need to get all this infrastructure. And I think that's one thing that a lot of people don't talk about is if you need to get everybody on board, all these integration partners, it gets expensive to launch a chain. And we want to lower that cost, lower that barrier to entry to get more people to be able to launch their chain and allow more businesses to operate in a safe manner on chain.
Got it. So I think if I get it right, because there are so many rails built on top of like the L1 already. Launching with zkSync, you can basically tap into all of those network effects instead of building them out from scratch, like the connectivity with
Exactly.
Binance, for example, or the liquidity on Aave, or just any of the interop stack stuff that you already have on the L1.
Yeah, exactly. And I think one thing that I'm personally excited to see is when you have tokenization of these assets on these private enterprise L2s and you actually want to tap in to liquidity on L1, there's only a few places where you can borrow $1 billion, and Aave is one of them. So I think it's just stuff like that where it's like bringing real outside yield to crypto in a sustainable way, I think is going to be crucial for this next cycle. We've seen it with the stream finance blow up recently and a lot of these other blowups in DeFi, that DeFi assets are continuing to get crazier and crazier and risk on. And we believe bringing in like real outside yields to DeFi via real world assets and allowing institutions that operate in DeFi safely kind of paves a way to crypto kind of growing up, so to speak, and
Mhm.
actually bringing like assets that are good and sustainable and understood and bring more transparency to this rather than just loaning money to people that are going leveraged long on lighter. At the end of the day, like there is a better path forward and we'd like to pave that way.
I mean, there's obviously a world that just wants to trade on lighter. Like we won't judge them. We need
But
both,
yeah, I'm not gonna
both
judge them.
uses.
We we love all the different use cases of crypto, and I give props to those guys. But I think that in general, it's about what can we do to bring more transparent, better products into crypto. And we think that like allowing enterprises to operate safely in DeFi really opens the door to like bringing billions, if not trillions of dollars on chain over the next few years. It's like I think that there was that meme a few months back with Plasma, I believe it was, that said, we're going to bring
Mhm.
trillions on chain. We honestly do believe we're going to see trillions in stablecoins, in tokenized deposits on chain. But at the end of the day, if you can't have those assets operate safely with DeFi, it's not going to make a difference to DeFi. So we want to make it easier for those assets to come into DeFi, have institutions earn yield in a safe way that's compliant, rather than just kind of sectioning them off into their own section. We're finally at a point where these assets are comfortable with DeFi. So paving the way for them to do it safely is huge. So
Mhm.
we're really excited for it.
Yeah, and you touched on real world assets as well, right? I think I saw a stat that zkSync was basically the number two chain just behind Ethereum in terms of tokenized RWAs. And the popular assets were gold and US treasuries, right? So what's going on with real world assets, and like what sort of interest are you seeing from institutions? And how are they coming on chain, and like what do you see as the future of RWs in particular? Because I feel like everyone is talking about it, but what does that actually mean? Is it just gold? Is it like more sophisticated assets, more like other alternative assets? Like what are you seeing right now?
Yeah, we've actually seen a lot in the private credit space, I would say is the biggest one for us. And then also seen some stuff in US treasuries, gold, and a number of different assets. I would say over time, we're going to see more assets come on chain. I think more transparency around these assets will be interesting to see because a lot of these assets, I would say, are less transparent than the average crypto user. Crypto users in general have a deep demand for instant liquidity
Mhm.
and no haircuts on their assets, which is a very different kind of set of demands than traditional asset managers are used to. So I think over time, we're going to see more and more assets coming on chain. For us, the major focus recently has been around tokenized deposits. We It seems over the past few months, it's gone from every couple of weeks or every couple of months, you saw a post on tokenized deposits from a major institution to now in the past few weeks, it's almost been daily, if not just several times a week, a new bank is launching tokenized deposits. We believe that those tokenized deposits will end up living on zkSync Prividiums. And we believe that's where a lot of the asset movement from kind of traditional finance will come on chain. If you get the banks on chain, then from there, we believe getting banks to operate safely in DeFi, getting them to essentially bring a lot of capital to earn on chain is a massive, massive opportunity. And that will bring billions, if not trillions of dollars on chain over the next few years. So I think that that will just mean that we're going to see a ton of different assets get tokenized,
Mhm.
because the bet for us is if you bring the largest financial institutions, that being banks, on chain, then all assets will follow where banks live. Because if you can have the banks there, then all the asset managers that want to sell essentially their assets into the banking customers will need to tokenize those assets on chain. They'll want to be as close to that customer as possible. And we believe 90% of that volume is going to happen on Prividiums. And we believe this is going to flip stablecoins over the next few years
Mhm.
by being able to leverage Ethereum's network effects. That's how Ethereum goes 10x in DeFi from here. We've already seen it with customers that want to tokenize amounts greater than all of Ethereum DeFi. And I only think it's going to get bigger and bigger from here. So I couldn't be more bullish on that side of it.
Yeah, I mean, long term picture, like I think there's no doubt that everything is coming on chain, and like let's say, all the financial activity sort of happens on chain. But thinking about today, like what's the incentive for these asset managers to tokenize their assets, right? Like, are they tokenizing it in the hope of getting more customers on chain, or like what's their incentive basically?
Yeah, I would say their incentive currently is opening up new markets on chain. There's new things that they can do via stuff like looping and stuff like that on chain. And I would also say 24/7 asset movement and better tracking, better auditability of these assets is crucial. It's just a better system than what they're used to. A
But
lot of
does
these
that
systems,
pitch actually resonate with them? Like we are all sold on this vision, right,
yeah,
of crypto.
yeah, we're talking to asset managers weekly at this point that are wanting to move assets on chain. They're excited to move on chain. They believe it's a better system than what they're used to. They're used to a mountain of paperwork. And when you show them smart contract code, and it's like you can go from spending 9 months on a deal to spending just a couple of weeks writing smart contracts and you're good to go and you can standardize this. So instead of needing to write new paperwork every single time, if once you write out your bond smart contract, you just change a few parameters for each new bond you issue, it's just infinitely easier for them.
Mhm.
So I think that we've seen it really resonates with these asset issuers and these asset managers to come on chain. I think it's a matter of when, not if, at this point. And I think that having more and more tokenized deposits and more assets in general moving on chain will be the thing that kind of moves these asset managers along to come on chain as well, because their biggest customers are holding funds in these large banks that are tokenizing deposits already. So once those customers operate on chain and are used to 24/7 fund movement,
Mhm.
they will be wanting to earn essentially yield in things like money market funds and doing cash sweeps into those as well. So it's just a logical next step that the money market fund tokenization like market will just increase significantly from here. Because at the end of the day, why would I hold a stable coin that's not going to pay me any yield if I can hold a money market fund that will pay me a yield? It just
Mhm.
doesn't make sense from like an institutional perspective, especially when you're holding hundreds of millions, if not billions of dollars on chain. So we think that's what kind of gets a lot of this stuff kind of moving down the road.
Okay. I mean, I think the incentives are clear from like why should you tokenize your assets perspective. But I think a lot of asset issuers and like stablecoin issuers are currently dealing with this problem of how do we make these assets useful in DeFi, right? Because it's one thing to tokenize these things, but then it's a totally different ball game to actually make them usable and like see usage across DeFi. Like let's say being used across pools or as collateral or just as a trading pair, for example. So, how do you actually help these companies like go to market from that perspective? Like, how should they think about making their assets useful on chain?
Yeah, on that side, we've had a number of conversations around kind of what standardization looks like. We're big fans of vaults internally. I think
Mhm.
that in general, we believe that like having tokenization standards such as like ERC 4626 and vault standards like that makes sense. Um, from essentially kind of centralizing the purchaser of record and allowing these assets to move more freely within DeFi. I would say it's
Mhm.
very asset by asset specific at this point. And also, different jurisdictions have different requirements on KYC, AML, and kind of KYB as well. So essentially, understand where these assets are going, how these assets are entering DeFi. I think the nice thing is DeFi has finally matured to the point where both Morpho as well as Aave have their essentially institutional ready offerings that allow you to embed KYC, allow you to embed the primitives that institutions need to feel comfortable bringing their assets into DeFi. And I think it's only a matter of time before we see more DeFi protocols follow that as well. I've already heard from a number of people that it seems like that's the way this industry is going. And I think making those assets usable is only a couple of months away at this point. But I would say one thing that I do believe is that some amount of the demand for these assets is going to come from net new people in crypto rather than just crypto people buying new crypto assets. I think that we're going to see more fintechs, more banks kind of offering access to these products. Because from the bank's perspective, it makes sense to offer access to these products to their wealth management clients. Um, so I think in general, expecting crypto to bid every single new tokenized asset isn't the playbook that works out long term. But I do think every asset will be tokenized, but it's more likely that I'm going to buy those assets in my retirement account because my wealth manager will essentially just do it for me because it's cheaper and easier for them to rebalance it on chain because it's very cheap and easy to rebalance things on chain with gas being so low, especially if you're on a layer 2 solution. That like at that point, I think that the cost of doing business on chain is just lower for people. So I think that that's where I think I differ in opinion from a lot of people. I think a lot of people think that tokenized assets would just get used by crypto natives. I think that there's only so much of crypto natives that'll buy them, but I don't think that's a bad thing either. I think that it just means that this is a new primitive for finance to operate in. And at the end of the day, there won't be a TradFi and a DeFi. It's just going to be finance at the end of the day. It's all fintech.
That's a great way to put it. But like the only reason I asked that question is because like a lot of institutions and a lot of like banks, they issue these assets, of course, in the hope of also getting more usage, right? Because when we actually look at the success stories with stable coins like Tether or Circle, like they're winners in their category, right? Or even in the tokenized asset space, I think BlackRock's Biddle has a massive like market cap at this point. So I think when you look at those success stories, of course, when these institutions are launching these products, they want to emulate that success, right? But I haven't seen that being replicated across many different players. And I feel like a certain part of the go-to-market strategy would, of course, be, of course, like in the long term, you want your existing users to come on chain and like buy these products. But then, of course, you see these success stories and you want to emulate that success. But it's not that easy.
I think in general, it's very similar to venture, where there's always going to be like power laws where there will be certain people that win out and win out completely, and it makes it all worth it at the end of the day. I think expecting every product to be good on chain is not going to work out, but I think that in general, the best products will work out on chain, and it also allows because it's on chain and it's 24/7 movement. It's constantly earning yield. It's much more accessible. It opens them up to a lot more markets where a business in India, for example, can now easily access money market funds for UST bills, and it can hold their funds in that rather than needing to hold their funds off chain in a bank account. So I think in general, being able to constantly move money, constantly every balancing going on, I think there's just so much money movement that right now is essentially blocked off because of banking not being 24/7 in general. Once all this money movement is 24/7 and can constantly earn yield, I think people just aren't ready for how much more assets can kind of move and be used. Like your portfolio could be getting essentially updated like 24/7 because these fees will go down significantly. And you could be holding assets up until you pay for things at the cash register and you swipe your card and you immediately sell out of the S&P 500 and buy your groceries. So I think it's just there's such TAM growth that could be happening that yes, there will be a usage of these assets on chain. And I do want to say that there will be great use to the assets on chain, but it's also once the entire world is given 24/7 financial rails, the market just becomes a lot bigger. And there's a lot more interesting things that we can do with that as well, from lending to swaps to interest rates, interest rate trading. Like it's just I think the market's just much bigger than people think. It's going to be an infinite sum game rather than just something where it's like, oh, it's a little bit bigger. I could see this being like a 5 or 10x
Mhm.
difference.
Yeah, I mean, the composability that crypto and blockchain in general has to offer is off the charts, right? I don't think
Yeah, it's nuts.
the average
It's money
person is
lagers.
actually, yeah, the average person is not ready for 24/7 trading like markets in general, because like we have a very rigid framework for trading assets. Firstly, by jurisdiction, like geography. Like if somebody is in India, they're mostly just trading like on the Bombay Stock Exchange, right? Or if somebody is in the US, you're basically trading on the New York Stock Exchange. But the fact that like I think this just happened actually. Like Google started like an uptrend, right? So I wanted access to that asset, and I ended up buying it on Solana because that's just the easiest way for me to get exposure.
Yeah, and like stuff like that's insane because like it shows me that we're truly building like what is the base there for like the global financial system coming on chain. And it's just been crazy to see that it's like it's better, it's cheaper, it's faster, and it's easier. So
Mhm.
at the end of the day, that's where I believe that like all these assets will live on chain, and it's just going to deliver like a financial system that works for users, not against them, because there's so much improvement to be had on this stuff. And we'd love to be the company that kind of helps these financial institutions move on chain in a way that's safe, compliant, and
Mhm.
verifiable. Because like
Mhm.
they don't need I think the crazy thing about it for me at least is a lot of these institutions care a lot more about decentralization and crypto values than I think crypto people now do, where they care about crypto economic security. They care about decentralization. They care about like how is this system built, um, and like what's actually happening. They want to see the code. They want to understand what's going on under the hood. And I think that due to that, um, they're holding us to a higher bar, and we're happy to be held to it. But I also think it shows that like we're gonna be okay. Like I think a lot of people are kind of looking at it just like institutions are coming in, they're going to ruin crypto values, and it's like no, crypto ruined crypto values when we decided we should all trade on a centralized exchange out of Tokyo. It's like crypto ruined crypto values,
Mhm.
guys. It's like it's a 3 validator set. Like let's not say that institutions ruin crypto values. Institutions care about crypto values. Crypto decided they didn't care for a while, and I think that it will be better off at the end of the day, long
Mhm.
term. So I'm excited for it.
Makes sense. And you guys also launched Prividium, like a framework to actually build private blockchains on top of Ethereum. Like, why don't we
Yes.
talk a little bit about that? Like, what's new in Prividium? Like, because as far as I know, you could always build private chains, and like institutions were already building their own chains, but now you have a new primitive with zkSync. So why don't you tell us about that?
Yeah, glad to. So Prividium is essentially what we like to call it the bank stack of Ethereum. It's a private enterprise layer 2 blockchain solution that is built with ZK proofs that has role-based access control, allows for permissioned access, and essentially allows institutions to control every aspect of the chain from their data availability layer to where the chain operates to any number of restrictions on gas, token, or anything they really want to control on the chain. And the major difference between these chains and like the Hyperledger bases and the old days of private institutional blockchains is these chains are still connected to Ethereum, and using ZK proofs, they are incorruptible because you can actually trust that what they say happened did happen. So it decreases counterparty risk exponentially compared to these old chains, because the old ages of consortiums would require months and months and months of legal agreements before they could even get off the ground. With Prividiums, if you're able to decrease counterparty risk and I'm able to prove out to you, hey, I'm sending you this asset that I received from another bank, you're able to understand here's what that asset is. I understand that's from so and so bank, and I trust so and so bank, and it's the real version of that asset, rather than having to go through a bunch of different phone calls and understand like, can I accept this asset? You're able to actually understand here's what I'm accepting, here's what's going on. It's verifiable versus just trust me, bro. We can have selective disclosures, so you can actually do proof of reserves on this, so you can actually understand what is the total asset supply on the network. We've already seen the adoption kind of kicking off already. We have Memento Chain, which
Mhm.
is a chain that's working at Deutsche Bank that has around 100 million in tokenized assets already on their chain, and that's live. We have more private AMs coming soon. Majority of them are tokenized deposits to enable money movement 24/7, kind of all around the globe. We also recently did a demonstration of around 30 institutions over the summer to essentially show how institutions come on chain safely, compliantly, and privately. We were showing them cross-border payments as well as intraday repo. And it was also showcasing how they could remain connected to interoperability. at this time, we've seen that every single bank that we talk to has a strategy around tokenized deposits. And the next step is really making them transferable and allowing them to essentially have a clearing layer, so they can swap them for stablecoins. And we believe that like long term, this shows a path to banks coming completely on chain where they go from tokenized deposits to money market fund sweeps, like we were discussing earlier, to foreign exchange, to entering capital markets. And at the end of the day, that's how you bring the global financial system on chain. That's how we build a better financial system. And once you have the banks, the rest follows, in our opinion. And we couldn't be more excited for it because it's showing real change and it's really going to advance the freedom of the world, which we believe is the most important part of what crypto stands for. And that's why we're excited to be building it on Ethereum, because it is the most decentralized and the best base layer for all of finance to live on.
But like, tell me something. Like, why is privacy so important for institutions in the first place? And right now, of course, the users as well with the Zcash narrative. But privacy just seems to be top of mind for everyone, right? And of course, you've launched this product and you would have been working on it for a long time. It's kind of like a good coincidence to launch it at a time where everyone is talking about privacy. But why do you think privacy is everyone's number one priority at this moment?
Yeah, we actually launched it a few months back before narrative. We're happy it's gotten picked up. Everything,
Yeah.
we appreciate the attention, but we've obviously just been kind of heads down building it for a while. I would say the reason why privacy is so important to the institution is they're required by law to have this data be private. It cannot be public. So it's not just a matter of cyberpunk principles. For them, it is a law and they cannot essentially disclose this data. And it's also a major risk to their users. If I'm a Fortune 500 company and I'm moving money around the world and I'm using tokenized deposits, I do not want my competitors to see so and so's moving money from their US entity to their like Brazil entity.
Mhm.
I don't want to be tracked. We've even seen it. I think the example that I like to give is I have family members that are in the financial industry, and I've heard stories before of people essentially tracking private jet movements. So they would track private jet movements at different airports for different smaller towns where companies are based. So, like, if you're based in Omaha, Nebraska, for example, there's only so many like Fortune 500 companies in Omaha, Nebraska. So, if you see a Goldman Sachs private jet that flies in to Omaha, Nebraska, and there's only a few companies there, and one of the companies is rumored to be talking about trying to do an acquisition, it's really easy to say, oh, so and so is doing an acquisition, and Goldman Sachs is probably their banker. So
Mhm.
it's stuff like that where that that cannot happen. If you want to have privacy on chain, institutions do not want to be tracked. It's trade secrets. It's integrity. Like I don't I don't want to be tracked. Like and I think in general, like we've just seen that like privacy is very important for institutions to operate in. And I would also like to say our privacy is a little bit different than Zcash.
Okay.
Zcash is more focused on cyberpunk privacy. We are focused on institutional privacy. So the operators of the chains are still able to see the transactions and can do disclosures to regulators. I actually spoke at Capitol Hill a few weeks back on exactly this. And it's very important for regulators and law enforcement to allow for privacy so users have their individual freedoms preserved, but there's still compliance where they can still look through these transactions and see, hey, nobody's doing anything messy here. Because at the end of the day, that's very important for us as a global, um, like, it's very important for the US as a country. And I also think the global financial industry as well to kind of do these things in a way that's right. Because we want to make sure that nobody's using these things for things that like aren't correct, so to speak. So we're very focused on how can we bring institutions on chain safely, less focused on trying to just like do something like Tornado Cash. That's not really our goal. So
And you mentioned like you got the opportunity to talk at Capitol Hill, right? And
yeah,
you've obviously been talking to a lot of institutions, and I think in one of the presentations or like interviews, Alex put it really well, where he said like institutions are facing an adopt or die moment right now, and
exactly.
basically like every institution needs to have a crypto strategy. And are you seeing that dynamic sort of play out? Like, do you see one a competitiveness between institutions because everyone wants to have a crypto strategy, and obviously some players might be more ahead than the others, and two, like an urgency to have this strategy in place and like come on chain?
I would say on the competitive nature, I'm usually brought in on a little bit of later calls.
Mhm.
But I would say that we have seen an increased sense of urgency with each of these different institutions that wants to come on chain. I would say that they are looking at their competitors and seeing that like we do not want to be behind. We've also heard of major multinationals going to their banks and essentially telling them, if you do not have tokenized deposits, we will take billions of dollars
Mhm.
and transfer them out. So for a bank that has, let's say, $100 billion in deposits, if they have somebody at that bank that's holding $5 billion, and they come to that bank and just say, you know what, I'm going to transfer all of my money out if you don't have tokenized deposits in 6 months, that bank's going to have tokenized deposits in 6 months. So
Mhm.
that's where I think we've been seeing a lot of this adapt or die mentality. Is when you, it's kind of like that old adage: if you owe the bank $1 million, it's your problem. If you owe the bank $1 billion, it's the bank's problem. So I think at the end of the day, banks are seeing their customers have greater demand for these products.
Sure.
And that's where I think the greatest change happens. And I also think it's better overall. It's not, these aren't bad products for these banks to adopt. It's a positive thing for people to adopt. And we're excited to see banks innovating. And yeah, overall, I think it just makes sense for it to happen now. Like it's regulatory, there's regulatory clarity. Everybody's actually been able to get this stuff adopted, the tech's ready. It's the right time.
And so, if this works out, and zkSync obviously has a vision for this future playing out, right? Because you've built the stack, you're positioning yourself for that on-chain movement. How do
Yep.
you envision the ecosystem to look like 3 to 5 years from now? Because, like right now, there's a lot of public blockchains. Like there's Ethereum, there's Solana, there's Hyperliquid, and there's like generalized chains. Then there's specialized chains, and now we're seeing like stuff like Tempo and Arc being built. So, with this world that you're pushing, where every bank has its own chain, how do you envision the ecosystem to look like 3 years from now?
I think I think in 3 to 5 years from now, we're going to see over $1 trillion tokenized on chain, and I think tokenized deposits will flip stablecoins.
Mhm.
I think that
That's a
we will
hot take.
likely, that is a hot take, but I would say the major difference is tokenized deposits, when they are tokenized, they're coming in size. When you see stablecoins, they're starting from zero, where they're launching them and then trying to get their users to adopt them. Tokenized deposits are different because it's an institutional product. So when you do a tokenized deposit at your bank, you're targeting your biggest customers that want to use this versus targeting your smallest customers that want to use it for the stablecoins. So I would say that due to that difference in kind of the customer demographic, I believe the scale of them can grow much, much faster. Um, I would also say that we're going to see more and more assets get tokenized. And I think in general, we're going to see a better, safer DeFi kind of come to be that doesn't just rely on willy-nilly incentives everywhere and hope that frog coin goes up. So it's just like at the end of the day, it's like it's just going to be a better environment overall. And I guess my one hot take is I think that we're going to see native interop solutions like what we're doing at zkSync get used more and more so for this stuff rather than intents, because I don't necessarily know if all intent-based solutions will be able to scale to essentially maintain all these different tokenized assets and get all the licenses required to hold all of them. So I guess that's my hot take is that I think interop is not a solved problem, and I don't necessarily know if intents are the way we get there. Um, so yeah, but time will tell.
Hmm. I mean, that was going to be my last question. Like, how do you actually see today's interop solutions plugging into the zkSync ecosystem or the world that you're envisioning, right? Like, I think
Yeah,
you answered the question. Like, of course, there's no need for fast interop solutions within the ecosystem because you've obviously figured that out with your interop stack and
yeah.
how you've built around the L1. So I guess like do you see a world where intents kind of go down in usage? And I'm guessing because like you also have like a shared messaging layer vertically integrated in a way, you don't see a use of external third party bridges from that perspective either.
I think we see usage of those for chains outside of our network. Like we're we're good friends with the folks over at Chainlink, and we've spoken to Layer Zero as well. Um, but I would say in general, we see that network specific interoperability just fills a different need for institutions because it offers atomicity, allows them to eliminate middlemen, and they can communicate privately, which is key for them. I would say
Mhm.
for intents, it'll probably still remain a large usage for crypto natives, but I think that the crypto native market will just get dwarfed by the institutional market long term. So I don't necessarily think we're just going to see everything goes down over time immediately. I think it's more so that we're going to see a new market kind of structure in crypto kind of emerge and a new market demographic emerge and only become bigger and bigger over time until it is the biggest part of crypto. So
Mhm.
I
Uh,
hope that kind of answers your question.
It does, and like I think just a follow up question on that, like there's also the token issuance standards, right? Like in Interop with OFTs, Layer Zero also has
So much fun.
the vault stuff. So like, how do you see that kind of fit into your picture? Like, does it have a place in the zkSync stack?
We're agnostic to it. We don't have, we made a conscious decision not to enshrine any of them. We just have our own essentially burn mint. So there's no opt-in. Like a lot of those
Mhm.
other interop systems, you need to opt in at like each different token. For us, if you're building a ZK stack chain, you're opted in. You're good to go. You're settling to the gateway because it's cheaper and it's faster. Because it aggregates your proofs before it settles to Ethereum. So that's already something that we've kind of set up. So we don't necessarily have an opinion on cross-chain token standards. We do believe people will probably build them out on top of us to connect to stuff like Solana or other chains. But
Mhm.
we're not necessarily taking a conscious decision internally to say that it's like you should use OFTs, you should use CCT, I think it's called, or any of these other token standards. We're more so just like, if you want it,
Yeah,
fantastic. If you don't want
but
it, or you just want to use our interop system within our network, feel free.
Mhm.
But we're very much so like permissionless network. So it's not like I'm gonna say that it's like you can't use other bridges to go to other chains we don't support. Like that would be silly.
Makes sense, and I think like you do see the rationale behind why, like we were talking about how these products need to find new users, new markets, right? So good to go beyond like the zkSync zones market and like other ecosystems, you kind of need these interop protocols and like their standards.
Yeah, I think we'll see usage of them. I think the question for us is just like how much of that actually needs to go beyond.
Mhm.
Because if Ethereum is what we believe to be the best place for assets to exist, we already have exchanges that are existing within our ecosystem. I don't necessarily know how much stuff you need to go beyond for, like maybe some stuff, but like once you have enough stuff kind of within your own ecosystem, I do think the question kind of remains like it doesn't make a ton of sense to move assets outside of it. We've also seen that the majority of new yield coins or like stable coins launch on Ethereum. So if that's the case going forward as well, then like I don't necessarily see the use case for them to launch on other networks. Like they could, but
Mhm.
I think it's also like, is this a business decision or is this an incentive decision? I think those are two different things. So we leave those decisions up to our customers at the end of the day.
I mean, but like, what about Solana, Hyperliquid, or any of these chains, right? Like, as a user, I of course see a point because I'm I guess multi-chain biased from that perspective. But yeah, like I do see
A
a
bank's not gonna a
yeah.
bank is not gonna go on Hyperliquid. That's one thing I don't think is happening.
They were
Maybe,
all fighting for
maybe.
like the stable coin to.
I know they were, but I just don't necessarily think we're gonna see tokenized deposits live on Hyperliquid. Maybe, but I
Yeah,
think that I'm less so bullish on that idea. I like that Hyperliquid tech. I think it's good, but I don't necessarily think we're gonna see banks live on it. Um, I think maybe over time that changes, but I think connectivity to Solana also is, I would say you can have a bridge to it. We're not
Mhm.
anti it. I just also think that it's like, it depends on what your priority is as an institution. A lot of these institutions just do business with themselves. With their other counterparties, they can all exist with their own private blockchains. So if you're only existing with yourselves, then it makes sense to just kind of exist within your own little zone. So
I see your point, and thanks a lot for like showing us what the zkSync vision is and like what you guys are building. And I think it's super interesting to be in this position right now because there's a lot of stuff that you've obviously like built and positioned yourself for the next 3 years, but there's still a lot of like unknown unknowns. Like we don't know how this will play out. So I think that's
yeah,
going to be super interesting.
yeah, it's a super exciting time. I'm really excited to be playing a small role in it. Thanks for having me on today.
Also.